Hey everyone, I'm looking at HTBX Heat Biologics, this biotech, and I just want to go over a few technicals here. Let's look at the weekly longer term outlook here on the stock. You see that the stock has challenged its resistance point twice so far. A lot of times these stocks, they make third attempts on resistance or support, and quote unquote, usually those levels on the third challenge are successful, but of course not always. So on a long-term perspective here from the weekly chart, it does seem like this could make an eventual attack on the downtrend resistance somewhere at $5 and change, but you know, you can definitely expect some resistance there and a price challenge. That's like the bigger picture. But obviously this stock has been in a downtrend since 2013 for the most part, and it seems like it's reached a capitulation here in March 2016. You know, where you've basically had what seems like an extinguishing of the majority of sellers, and then you've had this flat base period here starting in March 2016. This is the weekly chart for the last, 19 weeks. That's a long period of time, especially for a small, low float stock to base like that for that period of time. That's very significant. The base is flat. You know, I tend to focus on these small price, low price stocks a lot, and it's hard to find the ones that have a nice, clean, flat, narrow base. Most of them have, you know, they have a base going, but it still has a slight a downward slope to it. It's still in a downward, you know, and it kind of makes like a new low or a marginal new low, and that's a problem, you know, because it's not really a true flat base. The flat base is important because it just creates a redistribution of shares, it creates accumulation, and then when you have a big volume advance off that flat base, it can give confidence that the rally is going to be sustainable, because this is all cause or energy for the advance. The longer these bases are, or the longer the price action is, you know, the cause, the more potential it gives for a sustained advance, especially when it's on big volume like we see right here. So that's the flat base. Now let's just go to the daily, and you can see that there's a possible cup and handle tendency here. You know, again, here's the base, you have the price advance on the big volume. It's challenging this swing high here at near 187, and that was a big volume. Well, it was, you know, 5 million shares. And this date here, August 8th, we shot up and tested that close on 12 million shares versus this close, which was on close to 5. So basically double the volume on the test of this previous swing high one-day zoom higher back on March 17th. You know, that's a positive sign. If you have you know, a demand double than it was previously, it gives a lot of credence to the argument that you're eventually going to exceed that previous price level. So that's strictly from the volume and then the price dynamics. But then when you get into the structure here, you see that this kind of has a cup and handle tendency. You got the arc down here, flat base. Now you have the advance, challenge in the 180, you know, 186, 188 level. And now we've had this retrenchment, and the volume has dropped off dramatically here in the last 4 days. So I think there's a good chance that this is the handle portion of a very large cup and handle chart. The breakout measurement is close to $3 as a possible first target. All right. Now let's zoom in on the daily prices here. So we see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of price advance. Now, when you look at these small caps, and you look at some of what these other stocks have been doing lately, including some of the Chinese stocks, other biotechs and others, there's a lot of speculation going on because the market's basically been going up in a straight line. But relatively speaking, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10 days of advance relative to that multi-week base, it's not that much. And so to me, it makes a good argument that this has got a lot more juice in it, and there's a lot more energy that can be dissipated by going higher. You have to entice sellers here, I think, at a higher price. So here we have a gap on August 8th. The gap was on 12 million shares. So gap support is at $1.45. And that gap is at 12 million shares. So gap support of 12 million shares at the low of $1.45. That's pretty strong. Now obviously, ideally, you do not want to see a break filling into that gap in the near term. The strongest case you can make is that this just holds as gap support, and then price can resume its upward advance. A lot of times on intraday charts, like on 5-minute charts, when you see a huge opening gap, let's say on a 5-minute time frame, then you'll see price come down to test that gap, and then you see price advance on the intraday basis, like on the 5-minute chart, and then continue higher. So this is obviously not an intraday chart, it's a daily chart, but you have the big volume gap, 12 million shares, and the price over the last 3 days, it was not even able to touch that level. The low, like I said, here is $1.45 here. The low here is $1.46. The low here is $1.46, and here the low is $1.52, about 6 cents higher than the low of August 11th. So, it's kind of making these slight higher lows. It's a small point, but it's potentially very positive point. Because you have to look at what kind of power are sellers able to achieve here? What are they giving back relative to the price advance? And so far, it doesn't look like much. The strongest case I can make for a near-term strong advance is that if we hold this dotted blue uptrend line here, resistance is around 188, but if we continue to hold this uptrend line and we start to tick up on Monday, right out of the gate, it makes a strong case that this is ready to move sooner rather than later. The other scenario is that we move sideways. If we move sideways or close flat again on Monday, Tuesday, then this thing may take a bit longer to shake out the rest of the sellers. But the volume drop off here to 786,000 shares on Friday, August 12th, it's a pretty positive sign. The volume has just dropped off very rapidly on these declines. So I think what's going on here is you have the float possibly locked up. It's got 12.5 million or 13.5 million shares in the tradable float, according to Yahoo Finance, and Google Finance seems to confirm that as well. Again, I don't know if those numbers are 100% accurate. A lot of times those numbers, they're not very reliable. But either way, if that's somewhere in the ballpark, and you've got this 17 million share advance here, you have a 12 million share advance. Basically, it seems like a lot of the float is locked up, and whoever's locking it up is not willing to sell off many shares. So I think it's looking pretty good for next week. This going sideways a bit more, or even a downtick to fill the gap, is not the end of the world. But if we do fill the gap, I would definitely want to see $1.31 hold, and not really break down much more than that. And The thing is, because like once you have this initial momentum, the strongest stocks, they keep that early momentum and then they just take off. They don't wait, you know. So going sideways, flat, or slightly down early next week, it's probably a sign that this consolidation, or this handle portion, it's going to take a bit longer to work off that previous swing high I talked about on the weekly chart. So that's a wrap, and let's see what happens next week. HTBX, very interesting chart, and we'll have to see what happens. Okay, I'm out.